Hey there, students. My name is Nathan, and I am a Chegg tutor. Today we're going to be talking about purchase discounts and purchase returns and allowances for merchants. So merchants, they buy inventory from their suppliers, and then they resell them to their customers, and hopefully make a profit. Now, when these merchants, they purchase this inventory from their suppliers, sometimes the supplier will give them a discount if they pay them within a certain period of time. Also, sometimes merchants will purchase inventory and realize that maybe it's defective and they'd like to return it. So today we're going to be talking about how to account for purchase discounts and purchase returns and allowances. Now, an allowance is basically like a credit from the supplier. If the merchant decides to return a good, the supplier might give them a credit to their account they can use for future purchases. So on the left side here, I went ahead and talked about how this works. So like I was saying, merchants will purchase inventory and resell it to their customers, and sometimes they'll qualify for a discount if they pay within a certain time period. Also, sometimes defective inventory might be purchased and may be returned. So the merchants can either refund them in cash or give them a purchase allowance. And so today we're just going to be focusing on the purchase allowances. And we can assume they're using the periodic inventory and the gross method. Periodic inventory basically is accounting for purchases as you make them throughout the period. And at the very end of the period, you reconcile it and figure out exactly how much you purchased, how much you returned, and so on. And we're using the gross method, which means that you will go ahead and record that discount when you actually pay it to the supplier. So not up front, but when you actually pay it later on. So once again, companies are granted purchase discounts if they pay their bill within a certain time. And these are stated as terms in the contract. So the discount over the number of days it must be paid within. So for example, terms 210. What that means is this, is that if the merchant pays their bill within 10 days, they qualify for a 2% discount. And that's recorded by debiting accounts payable. So they're reducing their liability because they get a discount, and they make a credit to their purchase discounts. Now, if there's a purchase return or purchase allowance, you will journalize debit accounts payable and credit purchase returns and allowances. So again, you're reducing your liability by either the discount if you qualify or by the return and the allowance. So I know it's a lot of information, so it'll be a lot easier if we go ahead and practice a problem here on the right side. So during 2015, LifeWorks Inc. purchased inventory using the periodic system. On January 15th, they purchased $1,000 of goods with terms 210 from their primary supplier. On January 18th, LifeWorks deemed about $150 of the goods were defective and requested an allowance from the supplier. On January 22nd, LifeWorks paid their balance in full. Record the journal entry for the purchase, purchase allowance, and the payment. So we'll start with the purchase here, which was made on January 15th. So on that day, they purchased $1,000 worth of goods. So all you do is you debit your purchases for $1,000, and you're going to go ahead and credit accounts payable because you will pay that later on for $1,000. Now on January 18th, there was that defective inventory they found, so they're going to request an allowance. So all you do there, you're going to debit your accounts payable because now you won't have to pay as much for that $150. You're reducing your liability by $150. And the supplier went ahead and granted you an allowance. You credit purchase, returns, and allowances for $150. So as you can see here, you credit purchase returns and allowances. That's directly offsetting your debit to your purchases. Now from here, we're going to go ahead and make our payment. So January 22nd, you're going to go ahead and pay them. So you know right away if you're paying them, you're going to go ahead and credit cash immediately because the word pay means cash. But we don't know how much yet, so let's figure it out. First off, we know that our purchase returns and allowances is offsetting our purchases. So we're not going to pay for $1,000, are we? Now you're only liable. If you really want to look at it closer, you can look at your liability to see exactly how much you owe. So you can look at it like this. You owe $1,000 on January 15th, but on January 18th, you got a return. So you actually go ahead and offset your accounts payable here by $150. So now all you owe is $850. However, you also are granted a discount if you look carefully, because you purchased it on January 15th and you paid it on the 22nd. Now the question is, did you pay it within 10 days? Looks like you did. So you are eligible for a 2% discount. But that 2% is not going to be recorded on that $1,000 because you don't owe that full $1,000 anymore. You only owe $850. So if you do 2% times $850, you get the amount of your discount. So we know that $17 will be reduced from your balance. So if you know that cash is $850 that you're going to have to pay, now you subtract $17 from that. So now all you owe is $833. But you have to record that discount as well. So you're also going to credit purchase discounts. So for $17. Now, here's the tricky part. I tell my students this. Whatever you record your liability for or your receivable for, either way, whatever you originally recorded for, that's what you reduce it by. So let's follow the liability here. First you owed $1,000, but then you debit it for $150. So now you only owe $850. So $850 is on the books right now. Now you've made your payment. So you have to take that liability off the books. To take it off, you debit it. So debit accounts payable for what was on the books, which was $850. So do debits equal credits? They certainly do. So hopefully that was helpful for y'all today. It's a lot of different things regarding purchase returns, allowances, discounts, and payment. So we went through the whole way. We started with your purchases, there was a return, and then now you paid it. So again, hopefully that was helpful for y'all. Once again, my name is Nathan. I go by Nathan G on Chegg Tutoring. You can find me here at this link. If you have questions about homework, need some one-on-one tutoring or exam prep, go to that link, send me a message, and I'd be happy to help you out. Once again, thanks for listening today, and I will see you in the next video.